leverage up and revenge trade.
Most trading mistakes made by beginners, even intermediates and occasionally even advanced people when they lose their heads, is to do with trade sizing. So they take a loss too big. There's no damage done in taking your managed loss. That's part of the game and being wrong. The problem is that recovery ladder when you then emotionally negatively respond to taking an already slightly bigger loss. So let's say you lose 15 or 20% and then you think, damn, I want to get back to where I was, so I need to make 25%, so I'll trade bigger again, I'm sure I'm right this time. It's like a mental cognitive dissonance that makes you need to get back to where you once were, because you're now seeing yourself as the lesser self as dictated by this balance. And that then pressurizes you into trading bigger again on what looks like a sure thing. But now you're punch drunk because you must find an opportunity quickly. And it's not a sure thing. It's the first thing you grabbed hold of that best represents a possible trade. So you then bastardizing your criteria to grab hold of something that you expect to leverage you back into where you once were. This is a very big fatal spiral, because once again you then overtrade because you've got to make back more to get back up, and that's the recovery ladder concept, and boom, that is probably the single most destructive that sees someone have a £10,000 account reduced to, you know, a few hundred or £1,000 and then virtually giving up, realizing that they've blown it. I wouldn't say 91% are in that category. They don't all blow their accounts up from £10,000 down to 9, but they aren't possibly consistent with money management as a whole. And sizing is one element of money management. Don't forget, I said risk reward should be central to that as well. So they're taking trades that aren't worth the squeeze. The juice isn't worth the squeeze, and the probability of win rates, they haven't tested what likelihood they have of winning. Too tight a stop, something else I've mentioned. All of those things all fall under the larger money management cluster, and those are all key.